All right. Hey, good afternoon, everyone. So today's video is probably going to be about as short as Friday's because there's not a whole lot of new information to digest. I think everyone is kind of um, just sitting, letting harvest kind of grind through and get to a point where people are comfortable and where they're sold. Obviously, that's not really impacting wheat as much as it is corn and beans, but wheat is just chopping sideways. Today was kind of a nothing day. It did post a little bitty reversal, but it also did that on Friday too. So we have three reversal days in a row here on beans: Thursday, Friday, Monday. We'll see what happens on Tuesday. Obviously, we need to get up and out of here if that's going to be a bullish count. Otherwise, lower we go. How the escalating tensions in Israel are going to impact price is absolutely anybody's guess. Complete wild card. Nobody knows if that's bullish because it pushes demand this direction, or if it's bearish because it destroys demand globally. You just don't know what's going to happen there. So let's look at corn for any clues. Corn was weak today. Did have a bearish engulfing shadow, which isn't what we want to see, but stopped short of having a 3 inside down, which is good. Held the bottom of the daily cloud. Really not a whole lot of good or bad here. It's good because we're holding Thursday's reversal. It's bad because we're consolidating still in the middle of the range. We'd like to see it get up and away, but there's not a catalyst that would push it that direction, right? The crop is big. There's not a whole lot of really awful yields being reported. The windstorm was kind of a bust from a damage standpoint. And now you've got volatility in the Middle East, so there's not a whole lot of reason to be real active here. So we're just going to sit and be content with it for another day and see what happens. And we're going to keep an eye on beans. Beans do have a little bit of a story, right? The demand numbers continue to get better. The crush numbers were higher than expected. The export numbers are higher than expected, and the inspections are higher than expected. So beans have a lot of good demand news, and not any real bullish or bearish news coming from the fields. So I think beans have a nice story. Again, they had the nice move on Thursday. We're consolidating in the top portion of that range. We finally did reclaim this territory above 1480 on a closing basis. We'll just have to see what happens with beans. We need to see it get above 13 to 13.17. This high and this high before we're really going to be pretty comfortable with beans. But today was just kind of a nothing. Inside Friday's range, didn't really do a whole lot. So we'll have to wait and see. Again, is war in Israel bullish or bearish beans? I have no idea. It's bullish if we're fighting over energy and need more of it, because beans and corn are energy. If it's bearish, if that means that we're going to cut off supply routes to some of our enemies like China and ration and withhold exports from them. We have not done that so far. That seems like a far cry for our politicians to do that. But if that happens, then that's bearish beans, no question about it. It's also bearish corn. But until that does, we'll let the charts do our heavy lifting for us. And this one is looking more up than down. All right, that's all three markets. Literally, there's no other news to talk about. I guess I'll mention one more thing here, which is volumes. If you look at volumes compared to Friday, we were about 35% less than Friday, which was half of Thursday. So volumes are just collapsed over the last couple of days with the lack of information. Corn basically did the same thing as well. Friday was about 60% of Thursday, and today was about 2/3 or 70% of Friday. So volume collapses, price consolidates, nothing really happens. Hard to gain any kind of solid information from that trade action. And I think war has a tendency to do that kind of thing. So the only other thing I'd mention is on corn. The more you look at carry economics on corn, I don't know how anybody makes money carrying it. I think that the market is way confused by the carry economics, because the price of natural gas, the price of electricity, the price of materials, and the cost that it takes to carry grain, and the interest rates that it takes in order to handle it. I think the elevators are going to struggle to make money carrying grain. I don't see how anybody can really make it work. which I think it is bearish short term here, because really the only way the market can do that is by expanding the distance between the prices, right? And it's almost like wheat when we went to VSR. The way the futures markets are designed is to operate around a principle called convergence, where cash markets come to meet futures markets and futures markets come to meet cash markets at some point in the future, so that you can reliably expect your carries to be there. So one way that that works is that if you have a 30-cent negative basis today in December and a 35-cent or a 30-cent carry to July, that's just 60-cent expected return on that money, with 30 cents of financial carry and 30 cents of basis improvement. Today we're not seeing that happen. What we're actually seeing is basis strengthen and the carry stay wide, which is only accounting for about half of the mark. So you're getting negative returns on carrying corn if you're in commercial storage. So um, uh, clearly there's some people that are a lot smarter than that about those issues than we are, but I'm struggling to see how that works. So I think that's weighing on the corn market. Ultimately, I think that ends up being bullish, not bearish, but for today, I think it weighs on it. All right. That's 6 minutes. We'll be back with you guys on Wednesday unless something significant happens tomorrow. We'll just have to wait and see how traders digest all of the information. Remember, our risk is down if we have physical production and we have unpriced bushels. So let's be cognizant of that and be quick to hedge it if that becomes necessary. You always have risk trading commodity futures and options, and you should only do so in light of your own financial condition. Hope you guys have a great night. We'll talk to you later. Thanks.